Welcome back to Skytech-Lens. In 2025, over 42,000 factory jobs disappeared, casualties of tariffs that fractured supply chains and shuttered U.S. assembly lines. What began as a political maneuver has become an economic crisis, with Asian automakers slashing production, furloughing workers, and redirecting investments to Canada. The impact is personal. Families, communities, and local economies are all feeling the strain. Tariffs meant to protect American industry have backfired, forcing automakers into impossible decisions. Workers face layoffs, consumers see higher prices and fewer choices. The North American auto industry is being reshaped, with unexpected winners and losers. This is more than policy, it's an industry earthquake. So what's really happening? Which automakers are navigating the storm? We'll break down how each major Asian automaker is responding, from giants absorbing losses to smaller brands fighting for survival. And we'll explore why Canada is emerging as the new promised land for auto manufacturing, and what it means for your wallet. The numbers are grim, but the reality in Detroit and the Midwest is even harsher. The 25% tariff on imported auto parts has driven up costs for every automaker with a global supply chain. For Asian brands, nearly every component now costs more, squeezing profit margins or forcing price hikes. At first, automakers tried to absorb the costs, but that couldn't last. Now prices are rising. Sedans that cost $25,000 last year are pushing $30,000, not for new features but because of tariffs. Buyers are holding on to old cars or leaving the new car market, slowing sales and triggering a vicious cycle. Dealerships cut orders, factories slow production, and layoffs become permanent. The official 42,000 jobs lost only counts factory workers. The real toll is much higher when you include logistics, suppliers, and local businesses. For every assembly line job lost, 3 to 4 more in the community are at risk. Tariffs meant to boost U.S. manufacturing have made it more expensive to build cars in America. Companies that invested in U.S. plants now find themselves at a disadvantage. Instead of jobs returning, they're vanishing or moving to Canada, where trade is more stable. This isn't just an economic debate, it's a kitchen table crisis. Families worry about affording reliable cars, towns fear losing their biggest employers, and the industry faces a new reality. The dream of bringing manufacturing back has turned into a nightmare of empty factories and rising prices. The American auto industry is at a crossroads, with policy now its biggest obstacle. The ripple effects threaten to hollow out entire towns. The question: can the industry adapt before more jobs and choices disappear? Toyota and Honda, industry titans with deep U.S. roots, are in full damage control. Their approach: absorb financial pain to shield customers while racing to localize supply chains. Toyota reports losing over $1 billion per quarter to tariffs, money that could have gone to innovation or employee bonuses. For now, they're eating the cost, keeping prices stable to protect market share. Honda, with major U.S. plants, faces the same dilemma, relying on Asian parts but trying to shield buyers from price hikes. Both are scrambling to find U.S.-based suppliers, retooling factories, and investing millions just to maintain current production. It's a massive, years-long effort with huge costs. Toyota is pouring money into U.S. plants for retooling and logistics, not expansion. Honda is shifting some production to Canada and Mexico to dodge tariffs where possible. This logistical shell game minimizes tariff impact, but there's a limit to how much they can absorb. Analysts warn, if tariffs persist another year, even Toyota and Honda will have to raise prices significantly. Their financial reserves aren't infinite. They're praised for protecting American jobs and prices, but penalized financially for doing so. The question: how long can they sustain these losses? Their strategy is endurance, not victory. The giants are steady for now, but even the strongest can crack under pressure. Their commitment to American workers is real, but the storm isn't letting up. The longer tariffs last, the more likely price hikes and deeper cuts become. The industry's pillars are holding, for now. But the cracks are showing. If Toyota and Honda are strained, the next tier, Nissan, Subaru, Mazda, Mitsubishi, are in survival mode. Without deep reserves, they can't absorb losses. Passing costs to consumers is their only option. Nissan, already facing internal turmoil, was first to hike prices and cut incentives, especially on sedans. Sales plummeted, forcing production cuts and layoffs, especially at their Mississippi plant. Subaru, with a loyal U.S. following, relies on imported engines and drivetrains, costs they can't avoid. Even their Indiana plant can't escape tariff pain, so prices on models like the Forester and Outback are rising. Mazda and Mitsubishi, with little U.S. production, are hit hardest. Most of their lineup is now subject to tariffs. Mazda's Alabama plant offers some insulation, but core models remain import-dependent. Mitsubishi, the smallest, is being squeezed out of the affordable segment, forced to drop models and trim levels. These brands are cutting costs, reducing marketing, and streamlining lineups just to survive. For consumers, this means fewer choices and higher prices. The quirky, affordable options are vanishing, replaced by pricier niche models. Tariffs don't just hurt big corporations, they hit smaller players hardest, reducing competition. The result? Less variety, more expensive cars, and a market dominated by giants. The mid-tier Japanese brands are fighting for survival, and the outcome is far from certain. The crossfire is thinning the field. Consumers are left with fewer, costlier options. While most Asian automakers are on defense, Hyundai and Kia are playing offense. Their bold strategy doubled down on US production, especially in Georgia. Years before the tariff crisis, Hyundai-Kia invested heavily in southern US plants, giving them a head start. When tariffs hit, they were already building popular models with more US-sourced parts than many rivals. Instead of retreating, they accelerated, building the massive Meta plant near Savannah, Georgia, focused on EVs and batteries. By producing both vehicles and batteries in the US, they sidestep tariffs and qualify for domestic incentives. This $12 billion gamble is risky, but it's paying off. While others raise prices, Hyundai and Kia keep theirs competitive, gaining market share. Their supply chain is tight and local, with Korean suppliers opening US factories near their plants. The contrast with sprawling global supply chains is stark. If tariffs end, Hyundai-Kia could be left with higher costs. But for now, they're winning. Dealerships are busy, sales are up, and jobs are being created. Their bet on local muscle is reshaping the US auto map, making Georgia the new epicenter for Asian automakers. They're not just surviving, they're thriving. The risk is real, but so are the rewards. Hyundai-Kia's strategy is changing the game. Tariffs are reshaping the car buying experience. Prices are up, choices are down. The average new car is now out of reach for many, pushing buyers into the used market and driving up those prices too. Automakers are slashing trim levels and options to cut costs, leaving buyers with fewer choices. Models reliant on imported parts are scarce, with long waits and higher prices. The crisis has exposed the fragility of global supply chains. One tariff can disrupt thousands of parts and delay production. Automakers are scrambling to reshore or nearshore parts production. Canada is emerging as the big winner. Thanks to the USMCA, automakers can shift production to Canada, avoid US tariffs, and still sell cars tariff-free in America. Canada offers a skilled workforce, stable trade policy, and government incentives. While US plants see layoffs, Canadian factories are expanding. Honda, Toyota, and Stellantis are investing billions in Ontario for EV production. Parts suppliers are following, setting up shop near Canadian plants. The North American auto heartland could shift north if current policies persist. Tariffs meant to protect US jobs may end up exporting them to Canada. The US risks losing its manufacturing edge as capital and jobs migrate north. The industry's center of gravity is moving. The consequences for American workers and consumers are profound. The question, can the US respond before it's too late? The verdict is in. Tariffs meant to revive US manufacturing have backfired. Instead of a renaissance, we see job losses, higher prices, and shrinking consumer choice. The US auto sector is walking a tightrope, with no safety net in sight. Toyota and Honda are enduring losses to protect customers, but it's not sustainable. Smaller Japanese brands are retreating, raising prices and losing ground. Hyundai-Kia's bold US investment is paying off, but only because the rules changed in their favor. Canada is attracting jobs and investment, while US plants struggle. The market is consolidating, competition is shrinking, and consumers are paying the price. The policy has made it harder, not easier, to build cars in America. The future of the industry depends on whether these tariffs are temporary or permanent. Automakers are making billion-dollar bets, but the landscape is uncertain. The American auto industry of tomorrow will look very different. Will it be stronger and more self-reliant, or diminished and left behind? The early signs are troubling. The auto industry has been transformed. Winners and losers are clear. Toyota and Honda are fighting to protect buyers, but at a steep cost. Smaller brands are being squeezed out, reducing variety and competition. Hyundai-Kia's Georgia gamble is reshaping the market, but it's a high-stakes bet. Canada's rise shows how quickly jobs and capital can move in search of stability. The definition of American-made is more complex than ever. The choices made now will shape the cars we drive and the jobs we have for years to come. What do you think? Will Hyundai-Kia's bet pay off? And can the US auto industry adapt before it's too late? Thanks for watching. Subscribe the channel for more updates.